This would also reduce tax revenues and consumer spending, deepening the downturn. Austerity measures in the Big Beautiful Bill. The bill includes tax cuts, adding $3.8 trillion to the deficit, per the CBO, and spending cuts, alongside provisions like new immigrant fees and judicial restrictions. Austerity, such as cuts to federal programs or agencies, potentially driven by the Musk-led DOGE initiative, could reduce public sector jobs and social services, eroding consumer confidence and demand. Trump's shift to austerity rhetoric, warning of economic sacrifice, suggests reduced government spending, which could contract GDP further during a recession. These policies would likely cause a recession, characterized by high inflation from tariffs and labor shortages, reduced growth from deportations and austerity, and rising unemployment, 6 to 8% or higher. Fiscal implosion. The recession would shrink tax revenues by $300 to $400 billion annually, based on 2008 to 09 patterns. While deportations reduce Social Security contributions, hastening insolvency by 3 years, per the Committee for a Responsible Federal Budget. The bill's $1.4 trillion deportation cost and $3.8 trillion tax cuts would push the deficit to $3 to $4 trillion, or 15 to 20% of GDP, levels unseen outside wartime. A downgrade would make borrowing costlier, forcing either deeper austerity, cutting Medicare, Social Security, or politically toxic tax hikes. Political gridlock, as seen in 2023 debt ceiling talks, could risk a technical default, though this remains unlikely. Global contagion. The U.S.'s 25% share of global GDP means a recession downgrade crisis would hammer trading partners. Retaliatory tariffs would cripple exports, e.g., $200 billion in agricultural losses, while deportations disrupt global supply chains, e.g., 1.5 million construction workers lost. Emerging markets reliant on U.S. demand could face crises, feeding back into U.S. economic woes through reduced trade and investment. This scenario could rival or exceed the 2008-09 Great Recession in severity. GDP contraction, a 4 to 7% GDP drop, driven by deportations, 4.2 to 6.8% per the American Immigration Council, tariffs, 0.5% per Goldman Sachs, and austerity downgrade effects, 1 to 2%. Unemployment, 8 to 10%, with 2 to 3 million job losses from deportations alone, plus additional losses from austerity and market turmoil. Inflation, 3 to 5% annually, driven by tariffs, 0.7 to 0.75%, dollar devaluation, 1 to 2%, and labor shortages, 1%. Duration, 2 to 4 years, prolonged by policy persistence, sustained tariffs, and slow global recovery. X posts reflect public fears, with users like @DeLong warning of an inflation and depression unprecedented in U.S. history, and @DogeAIGov citing a fiscal disaster. These align with expert analyses from PIIE, Moody's, and NPR, which project higher inflation, lower growth, and recession risks. U.S. resilience. The dollar's reserve currency status and deep capital markets would limit total collapse. Fed response. The Fed could cut rates or expand quantitative easing, though high inflation from tariffs and deportations might force it to keep rates elevated, as Powell suggested. Policy reversal. Political pressure from market crashes or public backlash, e.g. protests in Los Angeles, could force Trump to scale back tariffs or deportations, though his rhetoric suggests commitment to these policies. If all agencies downgrade the U.S., tariffs escalate into a global trade war, deportations remove 15 million workers, and austerity slashes critical programs. The crisis could approach Great Depression levels, GDP contraction of 8 to 10%, unemployment nearing 12 to 15%. Inflation spiking to 6 to 8%, with stagflation paralyzing monetary policy. Deficit ballooning to 20% of GDP, risking further downgrades. Social unrest and global economic collapse as U.S. demand and leadership falter. A AAA downgrade during a recession caused by tariffs, mass deportations, and austerity would create a perfect storm of high inflation, deep contraction, and fiscal chaos. The economy could shrink by 4 to 7%, with unemployment hitting 8 to 10% and inflation at 3 to 5%, lasting 2 to 4 years. The U.S.'s unique position would prevent total collapse, but recovery would be slow and painful, with global spillovers. Public sentiment on X reflects growing alarm, echoing expert warnings of a Trump-caused recession.